Our goal has always been, from day one since I took over, to put 24 months of feed between Beta Hunt and Higginsville into that mill.
Okay.
We have stuck to that. We're going to stick to that. And because it's mining, sometimes you can drill and blast them and you can get through them. So we will go around it, above it, underneath it. We will get through the obstacles we've had to. There's been nothing that's been so bad that we didn't anticipate. We believe we're going to drive value for our shareholders and give us another 6 months to a year, because we will create value in that share price for our shareholders. So all we got to do is continue doing what we said we'd do and continue to deliver.
Hello and welcome to Crux Investor. We're here today with Paul Huet, the CEO of RNC Minerals. Hi Paul, we're in London.
Hey Matt, how are you?
Good. Now you've been on a little bit of a roadshow.
We have. We've been hitting up several places, actually 4 countries and 6 cities in a couple days in the last 2 weeks. So it's been very exciting.
You tired?
A little bit, yeah. This is the end of the road, so looking forward to getting home to my wife and kids.
I bet.
Yeah.
So I know there was in Dumont in Cape Town, but you're over in Germany and now you've been in London. So what's the purpose?
Yeah, so we went to Canada first, then we went to the US, and then in Dumont, and finishing up in London.
Right.
The purpose is really to just get out there and show people some of the changes we've done. You know, it's been 7 months now.
Yeah.
I've been here for 7 months, and we have managed to make a lot of changes, from shareholders to the board of directors, the executive team. We're now in production, as you know. We've sustained about 8,000 ounces a month for the first 6 months, so things are going like we said we do. We're actually doing what we said we do. We're not complicating this. We're keeping it simple and doing what we said we do.
I would say it's probably one of the turnaround stories of last year, quite frankly, in any sector. You know, we were there sort of at the beginning when you joined. You had a bit of a task ahead of you. You have delivered, certainly in the production numbers. And consistently, so it's great. But I do want to talk about a few different things which are going on. You issued some guidance, which you said you would.
Yeah.
It's modest.
90 to 95,000 ounces at 8,000 ounces a month. It excludes our coarse gold, and we know that.
Right. Okay.
Look, and that's something people should really consider. It excludes coarse gold. Mm-hmm. It's our first year of total production. We're still fine-tuning everything, if you want to call it that. We're still evaluating, assessing ore sorters. That's certainly not gone behind us. Right. We're certainly evaluating engineering changes to the plant. We're looking at several things to upgrade and how we could even increase throughput. So there's opportunities there. But that range that we're putting forward in front of ourselves, it does exclude that coarse gold. So that don't lose sight of that.
Okay, so worth remembering. But in all of that, you've also been producing cash. Okay, you did raise a bit of cash to kind of allow you to put things in place. You're also producing your positive cash flow here. That is going to allow you to do things like the ore sorter, like some of the exploration that you're planning for this year. So can you talk to us about what are your priorities with regards to how you're going to spend that cash? You've indicated $9.5-10 million number on exploration.
Sure.
I get that, but can you run us through everything?
Yeah, so first, let me just talk about how the cash ended at the end of the year. As we announced, we ended with $37 million in cash. So a huge change, huge shift. We used $3 million of that $37 million to pay down some of our debt, which was really important. That's good. In all honesty, Matt, that saved us almost $100,000 in the first quarter, just in interest. So that's important for us and for our shareholders. We're going to spend $9 to $10 million in exploration this year. We've already started some of it. We've got a good detailed plan. We've just unlocked an area at Higginsville that has 1,800 square kilometers. We just announced the Fairplay open pit. That's a brand new area for us. It's a kilometer. It's 1 kilometer from our plant. Yeah. So we've pre-stripped that. We're actually starting to mine in that. That thing is constrained only by drilling. There's no drilling around that. We did the original drilling here. So the initial grades from that pit look to be as good as open pit at Baloo. And we just got stage 2 permitted at Baloo, right? Right. That second stage of Baloo was all drilling that we did ourselves as well. So, and look, those areas that we had that were discovered, that geophysics, we did that gravity survey. what people have to remember is this area hasn't been explored in almost 2 decades. There's been some drilling, don't get me wrong, but whenever there's a royalty of 7% sitting on a project, it's a huge burden for anybody. So previous owners recognize that. Not a lot of people were willing to spend any money or effort in those areas, whereas after we renegotiated that royalty, we've unlocked a huge jurisdiction. We've opened up an area that was really gridlocked, that was landlocked for a long time under that royalty. So tremendous amount of upside for us to be drilling in those areas. And that gravity survey just discovered a 5-kilometer strike zone, which is just north of our plant.
Right, so let me come back to the exploration bit.
Sure.
I want to deal with the debt element, and why people, why companies, why CEOs make those decisions. So you're positive cash flow, which is great, and plus you had some money in the bank, 37 million at the end of the year. You pay down 3 million, it saves you $100,000-ish per quarter, was a lot of money. But wouldn't it be smarter to kind of keep that money available to you to actually advance the exploration in a more rigorous way? What was the balance off there between saying, well, actually, let's reduce this debt position, and actually let's go and drill?
Sometimes. In our case, it made much more sense to pay off our debt. There's often times that I've seen, even I've done actually, paid off debt with equity. We don't want to dilute our shareholders in this case. We can repay our debt while we still have an aggressive drill campaign.
Right.
We announced $10 million. That's the first $10 million in this district in a very long time. That's going to give us a lot of opportunity. And our drill bit will drive our priorities, right? The next drilling will come from this. If we feel like we need more money for drilling, we'll add money.
How? What do you mean you'll add?
We'll add money from our cash flow.
Okay.
Paying down our debt is really important. It's really something. We're looking at restructuring it as well.
So let's talk about the debt component, right? So you've got your $35 million, you paid off 3, got 32 left to pay. So most companies would look at that and say, we can restructure this and pay a little bit less over a longer period of time, or we can pay it off, or we can pay it down. I mean, what are the options that you're looking at, for dealing with that debt, and what's the time horizon there for people? Yeah,
so for us, our debt is due in June. We have an opportunity to extend that debt by 6 months just by signing paperwork, or we have an opportunity to restructure that debt, which is something we're strongly considering and working on. In fact, we have had a lot of interest from groups who I've worked with in the past, who have serious interest in restructuring this debt at improved terms. And don't be surprised if we pay down some more debt this quarter. It wouldn't surprise me that we pay down some more. Everything has to be considered. As you talked about, we have to consider drilling, we have to consider everything and make sure we have that pipeline in front of ourselves and the amount of cash.
No, I get that. I mean, that's your job. You're here to mitigate risk and make decisions on behalf of shareholders. We get that. And I say you've had a cracking 2019, end to 2019, and I hope it continues. But again, just to finish off on the debt bit, just want to get all the detail, is some companies would also look at things like standby facilities, because you mentioned something there was quite interesting point, which people may have missed, which was you may be able to restructure your debt on better terms, presumably because the company's in a better financial position.
And also because we've had consistent, sustainable production.
Right.
And another thing, a 2P reserve. That 2P reserve that we put out at Beta Hunt is very critical for lenders. So one of the things we're going to be doing is when we restructure this debt, we will be looking at standby facility. I've had standby facilities in my life in the past, but putting together a $20 million standby facility when you don't need it is the best way to get it.
Yeah.
When you need it and your back's up against a wall, you won't get as good terms. So for us, we'll be looking at potentially a $50 million facility where we take $30 million and we restructure it.
Yeah.
We have that, whatever group works with us, comes to the cross finish line with us, put another $20 million standby facility that we can use at our discretion when it's needed, for some consolidation, maybe for drilling, whatever we need it for, it's in place when we don't need it.
Yeah, I think I think the truism in banking, certainly when I was involved, was when the sun's shining, the banks offer you umbrellas.
Yeah, amen. Yeah, exactly.
Right,
We've
so
all been
it's
through
not
it.
something you foresee needing, but it makes sense, and I think it's very standard practice,
Yeah.
quite frankly.
Yeah.
Put it in place when you can, because it'll be cheaper. Okay, that's fair enough on the debt side. I think that's well covered, thank you. Can I talk about Morgan Stanley? You renegotiated that royalty with them. It's freed up, as you say, this very large land package for you to go and explore and work out what is there. What are your plans? Because it's a big piece of land.
Look, it's a very large piece of land, and we've actually started with our plan by the drilling from Fairplay. That was our number one priority.
Right.
Followed by the geophysics, the gravity survey we did. We did not know that the gravity survey would unlock or show us that 5 kilometer.
What does it tell you? So what is a gravity survey for people
It's
uninitiated?
it's a great exploration tool for us.
Right.
Just to oversimplify it,
Yeah.
Matt, it's an exploration tool that allows us, targets us for drilling. It's exactly what it does. It gives us some indications on where to drill. The thing that's exciting about this 5 kilometers is that from what we can see and all the historical information that we have,
Yeah.
there are no drill holes in this thing. This thing here just lit up in a gravity survey, and there's not one drill hole in a structure that's quite similar to what the structure that the mill was built for. The mill was built for the Trident mine. That Trident mine is just right at the mill.
Right.
That thing, we own it. That Trident mine is part of our land package now. So just north of it is where this 5 kilometer strike is. And look, as a reminder, Beta Hunt is 4.5 kilometers today. And Beta Hunt is constrained by land, not necessarily by geology. So,
Okay, so you're obviously going to just work on figuring out, well, you're trying to figure out what it is that you've got there. I mean, this survey is early stage. There's no drill holes. There's not a lot. So that's going to take some time and some money to work out what you've got. And you're going to throw how much money at that in 2020?
So look, we had other priorities that much more advanced than this structure in 2020. And we're going to follow through with our plan.
Yep.
The one thing I'm forcing our guys to do is follow through with our plan. This obviously changes things where we might introduce some holes into this year and change up our plan. Our goal has always been, from day one since I took over, to put 24 months of feed between Beta Hunt and Higginsville into that mill.
Okay.
We have stuck to that. We're going to stick to that. And we had a different set of pipelines, Fairplay being one of them, the extension of Baloo being another one. So right now we've got the extension of Baloo that pushes us to the end of 2020 now. We've got Fairplay coming in. We'll be drilling around Fairplay. There are other open pits that are more advanced, satellite targets that are more advanced than this unidentified 5 kilometer strike. We haven't even given it a name. It's so early. So you're right in saying it's early stages. So
if you want to.
Oh yeah.
It's a great name.
I don't know that, we might call it Crux, but if it won't be a Crux vein, it would be a Crux fault.
That's very good. Very good. So can I ask about it? You talked about getting 24 months of ore there to kind of feed in the mill. So that's not something which exists today, but you're building up towards this.
That's absolutely correct.
Right.
And from both. So I'm talking, Matt, from a series of open pits in front of us and from our Beta Hunt mine. And our Beta Hunt mine is going to require some more waste development, which we have planned this year. I believe in dollars, I think it's top of my head about $6.5 million of waste development. That's all part of our budget. That's all funded from the operations, right? Okay. It's not coming out of Treasury. In fact, Treasury this year will continue to build up, despite us having a very aggressive year in exploration, waste development, some equipment purchases, some upgrades to the mill, looking at ore sorters. We will continue to build up Treasury.
Right, so you said something last time we spoke, and it was the question was going around, and it's still around to a degree, which is people are saying, so do you keep gold back on good months and then, run it over into the next month if you need to, or is it all goes in as soon as you find it, it's all going in?
Yeah, and our mine plan is what dictates it, right? It's not about hoarding the gold, it's about how we sequence the mine, and those are really from crosscuts inward, so they're a retreat. Open pit, you end up mining where you're mining, so it's all about our mine planning. We are trying to build our mine plans to reflect what we put out in the guidance.
Right.
Our mine plans are a reflection of our guidance. So we're doing our best to remain consistent. Consistency is good for us as well, right?
Well,
it's a lot better for us.
And when you're having conversations about money.
Yeah,
absolutely. And just very quickly on the mill, have you had to spend any more money on it than you imagined? Do you still consider it a good purchase?
Oh, look, the mill was a steal,
right?
Hands down. Okay. Look, I've had 13 mills approximately report to me in the last 2 decades. I built one almost from scratch. Esmeralda, it was a small thing that we had to almost rebuild. Mm-hmm. This thing here, this Higginsville plant is in great shape. We've spent so far probably about $1.4 million Australian on it. Very, very small amount to make some major upgrades for ourselves. And our mill's gone from a mill availability from about an 86% all the way up to about a 95%. And this is a real reflection on Graham, Cullum, and the team there. These guys, we're doing PMs to the mill now. We're spending the right money on the mill. We're making sure everything gets properly treated in the plant, and it's not neglected. The plant is not neglected.
Right.
This is the artery, the heart and soul of our company. We've got 2 open pits and an underground mine feeding this plant, and doré coming out of it. We need to make sure that it comes out on a weekly basis.
And one of the reasons you bought it was because you knew that you could reduce the AISC. I know you haven't finished last year's numbers and you're due to announce those towards the end of this quarter, but broadly, have you been able to do what you said, which was look to drive the AISC down towards that 1,000 number? Or do you think that's going to happen?
Yeah, so there's no doubt we believe it's happening in 2020. There's no maybe. We will get there.
Right.
We saw when our first original numbers, first half of the year was close to $1,300 an ounce, Matt, AISC. Q3 was $1,183, so call it close to $1,200 an ounce, so $100 an ounce reduction. Q4 numbers aren't out yet. Financials are coming out soon, but that trend is certainly continuing like we saw between the first half and Q3. So you'll see it's certainly trending down again in Q4, as we expected.
Okay.
There'll be no surprises. People, I think we were happy. I think once everything's finalized, they're not quite finalized. Things are trending in the right direction where they should be.
Okay, so that says to me that you going through this cost-cutting exercise across the organization. You talked about Graham, overhauling the operational side of things, and you have been elsewhere. So again, you haven't seen or come across any major headaches that you've had to account for.
No, listen, this is mining. We're always going to have headaches, Matt, and there's always surprises. The advantage we have between all our experiences, one way or another, we're going to overcome them. And because it's mining, sometimes you can drill it and blast them and you can get through them. So we will go around it, above it, underneath it. We will get through the obstacles we've had to. There's been nothing that's been so bad that we didn't anticipate it. We're very thorough on our risk register, and we mitigate quite a few of the risks. So,
okay, there have been a couple of reports about you guys being looked at as a takeover target in the market. Okay, and I don't necessarily want to, ask you what you think of that, but what do you think of that?
Look, I think I would be very naive to think that we're not in some people's or bankers' slide decks. Anybody who's doing what we're doing and has a centralized jurisdiction and unlocked so much value, we would be naive to think that we're not going to be a takeout target. We're not putting ourselves up for sale.
That was the next question.
We're certainly not saying, hey, look, we're up for sale. We believe we're going to drive value for our shareholders and give us another 6 months to a year, because we will create value in that share price for our shareholders. So all we got to do is continue doing what we said we'd do and continue to deliver.
Okay, because I think of it, you have been looked at, the company has been looked at several times, being put up for sale a few times as well over the last 3-4 years.
Sure.
And people, I'm talking Australian gold miners, perhaps sitting on a bunch of cash at the moment, because they are. It's been a good time for Australian gold miners. They've got to have looked at this and thought at the time, before you were involved, I'm not so sure about this thing.
Yeah.
But times have changed. So do you feel you're a much more attractive target should those conversations come around?
There's no doubt we're more attractive. We've got cash on our balance sheet now. We continue to reduce our debt. We've got a mill. We're sustaining production consistently. There's no doubt we are much more attractive than we've ever have been. We have, simply put, we've de-risked this thing.
Right, okay.
Whereas somebody would have come in before and they would have said, there's so much risk in here, operationally, geology. We have demonstrated through that 2P reserve, through the renegotiation of the royalty, through the consistent mill throughput, we have simply de-risked this thing significantly.
Paul, can I just ask about this 1,800 square kilometers? I mean, it's just a vast area. It's almost too hard to comprehend how big an area that is. But you've got lots of options and presumably targets in there. You've also now got the availability of cash and you're producing free cash flow as well. So are you targeting any specific areas in there, or, and I ask this because you've got so many options elsewhere in the organization, but you've got to get focused and you've got to help us understand what you think is important.
Sure. Pass me that map that I gave you earlier, Matt.
This one?
That one right there. Yeah. So let me just give you a sense here of some of the targets. So we have Baloo that we just got the second permit to extend to phase 2. We just talked about. We just did some recent drilling at Fairplay. We did the pre-stripping. That's very fresh and new. If you look close to the plant, we have the Two Boys target there. We have the Poseidon South. We have the Graveyard, Mitchell. Aphrodite, Challenger, and then more paleo channels. So look, on top of the 5 kilometer, we have a series of areas that we're going to be targeting, and predominantly in 2020, we're going to be mining Baloo and Fairplay.
Right. Okay.
Plus the Beta Hunt, obviously.
Okay.
So
that's what I mean.
You can see, and this is constrained too. So that 5 kilometer strike that's directly north of us, will likely get holes into it. We have larger priorities. We've unlocked so much potential here.
Everything's going great with the gold side of the business, but you've got this whole nickel thing going on, right? Dumont. Any news?
No update from the last one. We're still working alongside with our partner Waterton to find the best strategy for us and for them. Look, the way I see it, for our shareholders, RNC shareholders, we really have an option on nickel. I firmly believe that. Nickel prices go up. I think it goes without saying, Matt. I think anybody will likely agree with me that presently there's no value in our share price on our nickel asset. And that's a positive thing. So whatever we can get done this year, whatever synergies or strategy we can come up with Waterton that makes sense, will create more value. There's none right now, so anything we can do will improve that share price.
I think it's a truism. The battery, the EV revolution, people are talking about it a lot. Nickel is quite popular, certainly amongst our viewers. But you're going to have to pull that trigger at the right time, right?
No, that's right. Okay. Look, it's a known fact. We own 28%. Waterton owns 72%. They're really driving the bus on this one. But the EV excitement is certainly not slowing down. Nickel had a really decent year in 19. If it has another decent year in 2020, there will be interest in our project. There's no doubt about it.
Okay, I'm going to let you go.
All right,
you must be shattered.
Good to see you.
But lovely to see you. Thanks for coming through London and going out of your way to make time for us. I do appreciate it. I know everyone's going to be really excited to kind of.
And I really appreciate you making fun of my beard. It was a lot of fun in the beginning.
I think we need a poll. We're going to run a poll on this beard. Guys, what do we think of this? We're going to find out.
All right.
Good to see you, man.
All right.
Cheers.